Hello there, Hector DeVille here. In this video we are going to be talking about the typical daily trading routine of a London Open breakout trader. Now the layout, the visual aspect of this video is going to be a little bit different because I'm going to be running simultaneously the slide presentation and my charting platform, and we are going to be switching back and forth from from one another. So I hope everything comes out all right. Now, what is it like to be a London Open breakout trader? Well, first of all, as we've already established on a previous video, the first thing you do when you sit at your trading station is to check the economical calendar to see any type of euro or sterling pound related news announcement that may come from the European economies. All right. In order to do that, obviously you refer to your favorite economical calendar. As you guys know, the one I personally like the best is the one from Forex Factory. Well, once you've taken notes of that, of the news announcements, and hoping there is nothing too interruptive as far as the news announcements goes, well, you go ahead and analyze both the euro and the GBP crosses. Okay, let me now show you my my charting platform. As you can see here, I have the euro against the American dollar, 1 hour time frame, the sterling pound against the American dollar, 1 hour time frame, Euro Australian dollar, Euro Canadian dollar, sterling pound Australian dollar, sterling pound Canadian dollar, Euro New Zealand dollar, sterling pound New Zealand dollar, Euro Japanese yen, sterling pound Swiss franc, and sterling pound Japanese yen. Those are the currency pairs that I like to, I like to search for London Open breakout setups. Okay, I simply fire off these different charts in the morning, searching for for my typical requirements, okay, as far as validating any particular setup as indeed a potentially valid trading opportunity for the upcoming day. Let me try to be more specific. What I do is I go into every single of those charts, all right, and then I check for the requirements that we've been reviewing on previous videos. For example, the euro against the American dollar. Do I have an intra-week trend as per the last 2-3 days? Yes or no? Do I have a tight and sideways Tokyo range? Yes or no? Is that Tokyo range located at the extreme of the previous day's range? Yes or no? Is price contained within the 50% average daily range band, etc., etc. And I conduct that exercise on all the different charts, all right, and then I pick the appropriate setups. That means that you will not be able to fulfill those requirements on every single chart. Okay, I have here 1, 2, 3. Let me move this over. 4, 5, 6, 7, 8, 9, 10, 11. 11 different charts. You are not going to find all those 11 charts, acceptable as per the London Open breakout requirements. Okay, eventually you're gonna just end with 2 or 3, no more than that. Okay, no more than 2 or 3. So you need to pick those 2 or 3 and simply ditch the rest. Now, once you've actually, once you have your winners, your 2-3 winners for the day, the setups that you are gonna be following for the upcoming day, you simply, check for the longer time frames. What you do is you go into the 4 hours time frame, the daily time frame, and then you begin drawing your key levels of support and resistance, okay, your trend lines, etc., etc. You basically want to see whether those setups are taking place at any decision taking level. Okay, we've already seen a video about that before, and you take notes of that. Now, once you have everything in place, you are ready to to begin taking trades. You simply need to wait for the London Open. Obviously all these steps must have been taken before the European markets wake up. Okay, what I usually do is I simply sit at my trading station between 30 minutes, 40 minutes, 45 minutes at the most before the London market opens. Once you get accustomed with this whole process, it usually doesn't take more than 30 minutes to go over these few steps. All right. So eventually you have those 2-3 appropriate setups, those 2-3 winners, and all you need to do is to simply wait for the London market to open. Okay, again, once you get the hang of it, you will not require more than 20 or 30 minutes. Alright, once the London market opens, you just need to simply monitor on those 2 or 3 charts the early morning moves, right? Just waiting for the breakout. Okay, waiting for the early morning breakout. If the breakout happens early in the morning, if we get our standard breakout pullback continuation pattern, perhaps a fake breakout on one direction, and then price turns around and gives us the signal in the opposite direction, perhaps you get a full swing retracement setup. You know, all those different possibilities that we've seen on previous videos. Well, that's what you're going to be monitoring, okay, on those early morning moves. And once you actually get your entry, you need to decide which of the 2 or 3 charts you were following, which of the ones you are going to trade, because you can only take one trade per currency. Let me try to explain myself here. If out of those, let's assume you picked 3 different charts for this particular day. One of them was the euro against the American dollar. The other one was the sterling pound, sorry, against the Canadian dollar. All right, and finally, the other one was the sterling pound against, I don't know, the Japanese yen. All right, the Japanese yen. Well, you can only take one trade per currency. What does that mean? You cannot take trades where the same currency is involved in 2 different currency pairs. So if I take this trade, all right, if I find an entry on the euro against the American dollar, I will not take any other trade for the morning on any currency pair involving the euro or the American dollar. All right. If I take a trade on the sterling pound against the Canadian dollar, I will not take any further trade that morning on any currency pair involving the sterling pound or the Canadian dollar. Now, if you look closely, you will see that the sterling pound is involved in both the sterling pound against the Canadian dollar and the sterling pound against the Japanese yen. That means that we will have to pick just one trade. All right. Out of these 2 setups, even if we get 2 entries, 2 valid entries on these two currency pairs, we will need to choose just one. Why is that? Well, because we don't want to overexpose our account to the market. If you take multiple simultaneous trades on the same currency, all right, on the same currency, you are going to be overexposing your account to one single currency. Any market event that may suddenly change the market value for that particular currency, in this case the sterling pound, that means that your account will take multiple hits at the same time, since you are involved in multiple currency pairs involving the same currency at the same time. That's not a good idea. So you can only take one trade per currency. Now, assuming we get 2 different, let me clean up my chart. All right, there we are. So from our early morning market analysis, pre-entry analysis, we've come up with few different winners, and by chance 2 of them are related to the same currency, in this case the sterling pound. So which one are we going to choose, assuming we get a valid entry on both of them? Okay, 2 courses of action here. First of all, we can simply pick whichever gives us the entry first, okay, whichever triggers first, or whichever gives us a best potential, or most beneficial earnings ratio. Now, what do I mean by that? Well, quite frankly, guys, I'm talking about the average daily range here. We would simply check the average daily range for both currency pairs. For example, the sterling pound against the Canadian dollar. Let's go to the sterling pound against the Canadian dollar chart. In here we can see how my average daily range custom indicator. We can see how price, let's assume this exercise was taken right as the London market was opening, okay? We had to pick on one particular pair, and it's 3 a.m. in the morning, and then we compare how far price has moved today and what's the average daily range. So today the sterling pound against the Canadian dollar has moved 116 pips, whereas the average daily range is 141 pips. So we have, let me see, 25 pips there, isn't it? Yeah. Is it? Actually? Yeah, it is 25 pips left. All right. Obviously, we will not take any trade if there were only 25 pips left to, to hit the average daily range. But again, this is a hypothetical case. All right, 25 pips left to hit the average daily range. Fine. Now we go back into the, we take a look into the second currency pair, the sterling pound against the Japanese yen, which is down here. Today, price has moved 114 pips, whereas the average daily range is 167. And that is 20, 47, 53 pips. All right, that's 53 pips left from a statistical point of view, okay, from an average point of view. So we can certainly see how the sterling pound against the Japanese yen has a greater potential for today than the sterling pound against the Canadian dollar. So obviously we would pick, in this case, the sterling pound against the Japanese yen. All right, that's it really. I mean, no secret here, guys. If both of them are pretty equal, okay, both of them are more or less the same potential for the rest of the day as per the average daily range, simply pick whichever triggers the first. Okay, no secret here. Well, once we've actually triggered our trade, once we are involved in a position, we need to simply manage that trade. Okay, isn't that true? What we need to do is to apply the concepts that we've already reviewed all that on a previous video. We would mark the average daily range projections on our charts. We would plot the round numbers as well, and we will simply locate our different partial exit levels around those round numbers between our entry point and the average daily range projection. Again, we've already seen a full video on that, on how to trail our stop losses depending on whether we are aggressive or conservative traders, etc., etc. And well, finally, assuming you are still, involved in that trade, assuming the trade is still open by the time the New York session opens up, well, what do you want to do? Again, you simply want to go back into your economical calendar and take notes of any news announcements scheduled for that New York session, in case any of those announcements is related to the currencies you are trading. Okay? If so, well, you already know what to do. Either you can simply close the trade altogether, since any news announcement is an interruption on your standard trading day, and well, you may not want to risk giving your profits back to the market, so you can either simply close the trade altogether if you are already satisfied with your profits, or if not, you can trail your stop loss either to break even or either to secure some profits, depending on how far in profits you actually are. All right, but at any rate, you want to secure a portion of the trade. Maybe you want to close 50% of the trade just prior to the news, 5 minutes before the news, and then move the stop loss to break even on the second portion of the trade. Like I say, that depends on you. All right, I will let you decide that. But at any rate, you want to take a note of the news announcements scheduled for the New York session, just to make sure you don't incur in the risk of giving all those hard-earned pips back to the market. Okay, now that's about it for this video, guys. This is the a standard daily trading routine of any London Open breakout trader. Those are the points, okay, the sequential points you maybe want to write down on a little sticker and stick it next to your monitor. But don't you worry, once you've traded the London Open breakout strategy for a few days, once you've gone through this process a few times, you will learn all this process, all these different sequential points by heart, and it's all going to become much more mechanical and much more intuitive to you. Alright, now, that's all for this video. Bye-bye.